So when I'm trading, I personally look out for three very most important things. And I would say each trader must actually have these. And for today, I'm going to be sharing these three processes with you. Now, very importantly, now actually let me give a clear background on how this works. So each trader must have a trading strategy, and in actual sense, a strategy must have an edge, and I'll show you in a minute. So very firstly, this is what I personally look out for, so you can also implement it into your trading to be able to become profitable. So the very first thing that I want to look out for is the price trend, okay? And I'll show you how this works. And then number two, I'll look out for my key levels. And then lastly, I'll look out for entries. Now this is much detailed than how we just see it over here, and that's what I want to share with you. Now let's start off. So market trends. Now I don't know if you guys have heard it, but most traders really understand that trading with a trend is a very important thing. Like at the end of the day, if you're trying to trade against a trend, you're not going to become profitable. And actually funny thing is, for all trading strategies, whether you're using demand and supply, support and resistance, smart money concepts, I don't know, any trading strategy, more often enough, it does follow the trend first. Now let me give you an example. I mean, you shouldn't come to your chart and find an uptrend and expect to take sales. No, that's a complete no. So all in all, if I have an uptrend, what should come into your mind is, well, I need to look out for buys. Same thing on the other side. If you had a downtrend, I wouldn't expect you to look for buys in such a trend. Not really. The overall trades in here are sales. Now, I've seen other traders who go against this law, and honestly, they never make money. I mean, you can actually make, a few profits here and there, but in the long run, you're not going to make money. And I want to show you how this all works. Now, let's actually go in detail into it. So price direction, firstly, or the trend. So I'll take these bad boys off, and then we can start off from one by one. Now, the price direction or trend. So firstly, finding this, you are going to start off with bigger time frames. That's very important. So bigger time frames, I'm looking at the daily, okay? I'm also looking at the H4, and we could even say the H1. But honestly, the H1 is much smaller, so you can consider this and this. Now, this doesn't matter whether you are, say, a swing trader or say you are a day trader, okay, or even a scalper. Actually, to take it even more interesting, for a swing trader, you could even start off from like the monthly, okay? Remember, what you want to establish first is, what's the direction of the price? Keynote, remember when we are trading, we are retail traders, but we also have big market movers. It could be institutional traders, it could be hedge funds, it could be what. So these people tend to establish the trend before we do. So obviously, if you're trading with $1,000, that has no big impact in changing the trend. Now what happens is, we have these big movers. These guys come in with millions, right? Or even sometimes billions or something. But these guys are going to establish the trend first. So it's really important that you have that first. And that's why I said, for a swing trader, you could even go extremely up to like the monthly, start off from the monthly, and then I'll show you how you scale down. So that's the very first thing. So as I mentioned, the very first thing is higher time frames, okay, for your trend. The number two on finding the trend, which is also pretty easy, is by looking at the price. Let me show you something. Now I'm going to show you all these things on a whiteboard, but again, when you come to charts, it's literally the very same approach, so nothing much complicated. And if we can actually go back to our screens, I'll be able to show you that. Or if not, we shall discuss it even in another video. But let me show you how you are going to find your trend. Now, actually, in the most recent video that I did here, I actually discussed how market trends look like. So if you didn't watch that, just go back and watch that video, okay? So here's what happens. So two ways. As long as you're in your bigger time frame, you're going to come over to the chart, see how the price is moving. If we have a series of higher highs, okay, this is an uptrend, and you have that at mind. On the other side, if you had a series of your lower lows, okay, this is a downtrend. And say if you had this, that's a consolidation or sideways market movement. Sideways market movement, okay? Then another approach is using trend indicators. Now, it's been a very long time. I don't even know if people still use indicators, but personally, when I was starting off, I was a huge fan of this. And till now, I sometimes use these indicators. So what I want you to do is you will come over to your indicators section. Let me show you how this works. So if you're using TradingView, okay, so if you're using TradingView, I want you to go over to indicators, okay, and then on the indicators section, I want you to type in moving average, okay, moving average. So a moving average is specifically a trend indicator. Basically, these indicators will show you what a trend is looking like, and which is honestly a big deal. So when you come to moving average, I want you to choose an exponential, okay? So you'll choose exponential. I'm not even sure about the spelling, but whatever, just as that. Then for the settings, we shall set a period to 200. And the colors you can choose, but all in all, choose a color that won't confuse you. And then when you have this indicator on your chart, this is how you're going to establish the trend. So with the 200 exponential moving average, or you could call it the 200 EMA, so EMA is exponential moving average, we need to see if the price is trending above the 200 moving average, that's an uptrend. And if the price is trending below, that's a downtrend. A much clear example is just over here. I'll try to put an example on screen from the charts, from the live charts, so you guys can actually understand what I'm talking about. But here's what happens. So say if you had your price, okay, so say you had your price just as that, and you have, so this is going to be your 200 exponential moving average. So in any case, if the price is above this moving average, okay, then that's an uptrend. That's easy. Again, I'm going to put live examples so it's much more easier. Then same thing on the other side. If you say you had your price this way, okay, and then the price is below this 200 moving average, okay, then that's a downtrend. Pretty easy. So these indicators make it much more easier for you to be able to find the trend. But again, I would say the most easier way is you coming to charts, looking at how the price is behaving, and being able to find the trend. Because to me, I feel like that's much more easier. But either way, this also works, and it's very, very effective. Bigger time frames, clear, then you have your 200 exponential moving average, even better. Now, after understanding the trend, what's the next thing? Now that's where key levels come in. Now, key levels tend to change depending on how someone trades, and I'll show you something. So number 2 is our key levels, okay? Oh, and by the way, go ahead, click the link just down in the description. You'll join the free Telegram channel. Also, if you'd love to use the broker that I use, the link is just down. Okay, I'll put these guys on. I have an eye problem, but yep. So number 2, as I mentioned, key levels. So here's what happens. So the price moves in the same waves over and over. I'll give you an example. If, say, the price came to a level, say we have this level as A. If at some point the price got to this point, more often enough, it's finally going to come back to this point sometime in the future. And let me show you actually an example. So in some ways, say now the price could do this, say it's going down, but then at some point it's going to reverse and finally come back to this level. Now in here we have 2 scenarios. The price could respect this level, that's option A, okay, could respect that level, or it could even reverse, break out and then continue, pretty easy. So the most important part is when you have these key levels or levels that have been tested a couple of times previously, then more often enough you are way much better. Same thing, this is also a key level. I mean, you can see the price has gotten here, meaning someday in the future, the price could finally come back to this point, and then we need to see some reactions over there. So when you are drawing these levels, most traders would say, well, I'm looking out for my demand and supply levels, and I'll show you what that means. So if I could actually highlight how this looks. So if say someone was looking out for the demand, actually when I was starting off, I used to consider support and resistance mostly, but this is it. So say you're looking out for your demand, or say looking out for your demand and supply. Okay, demand is a point where we had huge buying. Okay, then supply is where we had huge sales. Okay, I mean, so in such a scenario, what I want to do is I'll come over to the charts and see what did we have some huge selling pressure or buying, and I'll give you an example. So say we initially have the price doing this, okay, and then finally we see some reaction, and there we go, right? So this is a key level, and this is going to be a demand zone, okay? Now, as I mentioned, it does really vary on how people tend to mark these levels. Some other person could decide to actually draw it as a zone. It's like what I showed you. Actually, we shall do a detailed video about supply and demand so you have a much better example. Or you could actually just decide to draw it as a line, and you know, once the price comes back to this level, we shall be able to buy. Pretty easy. Then on the other side, say we have our supply. Okay, so we have our supply. I'll do this. Okay, so say we have the price initially going up and then comes back to this point to show some huge selling, and then there we go. So again, this would be our supply, okay? Now, again, as I mentioned, you could decide to draw it as a zone, or you could have to draw it as a line, just depending. But as I mentioned, it does depend on how you personally trade and how you tend to draw these. But most importantly, again, this is a key level, okay? So these key levels also have other details in. Sometimes you need to see how many times has the price come back to this point. How many times has the price tapped into that? We call it mitigations and all that. We need to see if the price has tested that level a couple of times, sometimes it tends to get weaker. But that's the thing. So when you have your key levels, what you need to wait for now is reactions. How is the price going to behave once it gets back to this point? Because more often enough, these levels are always respected or disrespected, and at some point the price will finally break out, all that. So, which is not a thing. Honestly, all you want to wait for is the very next step, which is confirmations, or when you are looking out for your entries. And that's number 3. Okay. Okay. So, number 3 is your entries. Here we can also think of your stop loss and then your take profits, okay? Now, after finding the trend, having the levels drawn, the very next thing is finding entries, because honestly, it doesn't make any sense. Even if you had the very best strategy, but you can't find entries, then honestly, that's bullshit. You're not honestly going to be able to make money. And that's it. So for entries, what I do is I'll start off with scaling down, okay? Scaling down to smaller time frames, okay? Yep, I personally believe the more you scale down to smaller time frames, the better you're going to see the market movement, okay? Now in here, I mean scaling down to the M15 or even the M5 for entries. This is a question actually that most traders have actually asked me. And that means you started off, say, from the H4, you went to the H1, sometimes M30. I personally skip this, and then you're down to your M15 for entries. Pretty easy, right? So this is the very, very most important thing. So I shouldn't expect you to find entries when you are on the H4. It doesn't make any sense. Actually, even when you are a swing trader, you have to scale down to smaller time frames to get entries, okay? Then on the other side, getting entries, you need to have confirmations. Now, to me, sometimes I tend to look out for candlestick patterns. I need to see how is the price behaving, and I'll give you an example. Say I'm looking out for buys. I need to see, say, a change of momentum. Say we had this bearish candlestick, and out of the blue we have an engulfing, bullish candlestick, okay? And actually now remember, first thing that we considered was, remember this is a key level already, because that's the very first thing that we needed, okay? And so we had a key level, and now we have this engulfing bullish candlestick. This to me could imply a reversal, and now we maybe could have a new trend, and I'll be able to get a very, very great trade. So say I had my buys here, I'd have my stop loss just below this key level, okay? Shouldn't expect you to have your stop loss again within this region, because I mean the price could actually come back off here to sweep out a few stop losses and all that to collect the liquidity, and you're probably stopped out, yet the trade was actually in your direction. So I would always look out for having my stop loss just below a key level. So what I'm trying to say is, before getting entries, well, I'm on smaller time frames for entries, I need confirmations. And for confirmations, sometimes I look out for candlestick patterns and see how the price is generally behaving. And in such a scenario, I would be able to get the very best trades. On the other side, sometimes I'll even use pending orders. And I think I should have a session and discuss this. So you'd have pending orders, and then you're able to even capitalize on those sniper entries. So pretty easy. Now, a quick recap. Firstly, we said number one is the overall trend. We said you can easily find that by just looking at the price or using trend indicators, and in such a scenario we use the 200 exponential moving average. Then secondly, we said you are going to have your key levels, and then lastly, entries. And on the entries, you are going to scale down to smallest time frames, have your confirmations, and you'd be good. So I hope you guys really enjoyed this and learned a lot. You can actually join the Forex Bulls exclusive community. The link is just down. You get to interact with over 1,000 traders inside. Then you get direct access to me and then 4 other mentors, Zoom sessions, live trading, and honestly a whole ton of value for a very small fee. And remember, the moment you're in, there's never looking back. I'll see you in the next video. Let's go. Cheers. I'm out.